So this is not the time that you want to add risk. And I know we have a slide that we've been constantly monitoring. We use it a lot for when to fill cash in our cash hubs. You want to go into that?
Yeah, it takes what we just saw, which was just since October, brings it back to 2018.
Right.
For a full cycle.
So you want to explain these channels here on where we're in them?
It just looks at the long-term uptrend of the market chained to 2018, the start. So the blue channel moving up is where most of the prices stay. They're very within that channel, and that's that 200-day moving average is the blue line getting average prices going back 200 days. It spends a lot of time within that channel. And we've broken out to the upside above that channel now.
Right. And that's where we're looking to see, is it time to fill those cash hubs? Is it time to rebalance the accounts? Because when you're above that blue line, you're above the long-term trend of what the market has been growing. So that means it's a little bit overvalued. It's time to kind of take some of that risk off. If we go back to 21, you can see that through that, we were raising cash, making sure that we had that 24 months, and since we've dipped below that, what we've been spending down. Well, now we've popped back over it. So now it's time to reassert, looking at drift. People that have 60-40 equity fixed income allocation are now north of 70%. Well, this is a good time based on these market trends to start pulling it. Now, the interesting thing is go back to 2021. Look how long we were over that trend. You don't want to just go and get everything out and become conservative on that. And it rarely spends much time below the channel, right? So definitely more time spent kind of raising cash, pulling your drift a little bit back in your equity, and not being overly
We'll talk
aggressive
about
here.
that. Obviously, we can't telegraph moves we're making on our show, but we think there's a good short-term bullish move from earnings. So it's not something we're saying, hey, we're rebalancing today.
Right.
We do want to see the short-term part of the market where it does look very bullish, but more intermediate, everything you're talking about of pulling a little bit of chips off the table makes sense. And when you talk about breaking above long-term trends, something typically happens that creates a regime change. In 21, it was interest rates were zero. It was there's nowhere else to go.
Right.
Now it's kind of in the AI onshoring, which could be a strong regime change that leads to another bull market. And we talked about it last month, which is once we've seen a 20% move off the lows, most of the time a year out from then, the market's up.
Right.
On average 17% more from that time.
And to what you're saying, if you just go back to 21, you don't sell right off as soon as you cross that trend line, because look how much higher it goes. But this is the time that you just start to pay attention to where the market is and these signals. It looks good still.